Welcome back. Dharmesh Kant also joining us now. Dharmesh, good afternoon. Markets have been in a pretty tight range. Some bit of curiosity on what the central bank meetings will hold this week. But that apart, we do seem to be in a bit of a standstill zone. What's your take on market direction? Dharmesh, can you hear me?
Yeah, now I can hear you.
Okay, great. I was asking you your take on markets given that we've been stuck in a tight range. We are awaiting central bank commentary this week, but otherwise as well seem to have stalled for now.
Yeah, I think as you rightly say, the market is being, anxious and we're waiting for what the US FOMC meet does and what the Bank of Japan action is. And going by what has happened by the ECB and the Bank of England, I think the status quo is likely to be maintained by both of them going into the US elections early November. So till that time, it's more of a status quo kind of a policy which we are also expecting. And given the scenario, how the global macros are placed and how our domestic earnings have fared so far, so we are very bullish on the market. The earnings which were announced for Q1 FY17 was quite encouraging on the operational profitability margin front and the PAT revenue front. And we think going forward this is going to take further steam as the effects of good monsoon and 7th pay commission roll out. So consumption driven themes are what we have been recommending for the past couple of months. Even I have reiterated the same on your channel as well. And going by the bullish bent of mind, in case there is a token rate hike in US or a surprise rate hike and the market tanks down, so we would be buying that correction. That would be an opportunity to get into quality stocks and go forward.
Okay, a few more stocks on the move today. Mohit, we've got a few of those pharma names: Markson, Dishman, Wockhardt, Biocon, even an Aarti Drugs. Any of these on your radar?
Well, a bunch of them actually are. But Biocon is one that's looking really good in the charts. It's trading at all-time highs and continuing to move higher. This is a buy with a stop loss at levels of 945. You could see targets of 975 to 980 on Biocon. Also, Jyoti Labs is one that's doing really good today in trade, trading again at all-time highs. This can head higher towards levels of 370. It's a buy with a stop loss at levels of 342. Sharon Bio is one very small cap stock locked on upper circuit today, so odds are this will open up higher tomorrow, heading towards 1150 to even 12, so one can get in here as well. And Dishman Pharma is one also that's looking good in the charts, trading at near all-time to all-time highs. This can head higher again towards levels of 220. It's a buy with a stop loss at 200.
Okay. What about some of these other movers today? Let's pull up a couple of these other names. Some that are a little weaker as well. So the Jubilant Group we've been talking about, some of the realty names like India Bulls. We've got ILFS Transport as well, and Dish TV, some names that are cooling off.
Well, ILFS Transport's seen a really strong up move, so it's cooling off, which is fine. You've seen it move from levels of 70 towards 110 and 107 in a matter of just a couple of weeks. So a little bit of cool off is good. We'll revisit it maybe in a couple of days when we can resume the up move. As far as India Bulls goes, it's kind of cooling off again from yesterday's up move, but the sector isn't really the best to stay in, so I'd want to avoid India Bulls. Even Kolte Patil was one that was seeing a good up move today, so even that can be bought into, but again you got some resistance levels around 132, 135, so actually let's avoid Kolte Patil for that matter. A few other stocks that are on my radar, Abha, is Aptech is one. It's seen a really smart up move in trade today, and this can continue to move higher in the coming few days towards 180 to 185, so this is a buy with a stop loss at 165, locked up on upper circuit. Also HCC is one that's continued to move higher after a couple of weeks of consolidation. This can head higher towards levels of 42 to 43. It's a buy with a stop loss at levels of 39. And lastly, Delta Corp is one also that's looking good in the charts. Has seen a really smart up move in trade today, trading at all-time highs. This can head higher towards levels of 180. It's a buy with a stop loss at levels of 163.
All right, Dharmesh, when you're looking at specific stock picks at this time as well, are there particular themes you're going by? Are you really hunting hard to find value in this market?
Yeah, definitely, because most of the stocks have run up too hard, and given the valuation comfort, hardly any left as of now. But still, I think there are some value buys, and the pockets are obvious. I think one has to look into financials, be it private banks or NBFC space, HFCs, and some cement counters. So among them, I think LIC Housing Finance merits attention and investment even at current levels, and there's a lot of scope and plenty of opportunity out there. The company is expected to grow its AUM at a rate of around 15 to 16% CAGR for the next couple of years, and with a stable asset quality and operational profitability increasing going forward, we think the ROEs are going to improve and the stock may merit re-rating going forward. So that is one stock which we have been recommending. Yesterday we recommended Castrol as a value buy for a multi-year perspective. The reason being high ROEs of the company, a clean balance sheet, and the volume uptick was seen for the last couple of months as far as Castrol lubricants are concerned. Earlier it was not happening. So a turnaround, and as the economy picks up, more and more lubricant uses will be there, and when the GST is rolled out, the traffic on the road is going to increase furthermore. So because the delay time will be less. So that is one value pick which one can look at. Apart from that, from the cement space, I think Ramco Cement or JK Lakshmi Cement merits attention. The valuation wise, there's quite a comfort out there, and the pricing has been firmer in the northern India as well as in the western part of the India. As after the rainy season ends up, I think the pricing will be play. Though the input prices of petcoke and has gone up, but that should be mitigated by the price hikes which these companies are going to take, and volume will be there. So these are the pockets I think one should can go for an investment bet. I would suggest not to go for a trading bet in any of these because these all are long-term plays. Among the banking space, from the public sector bank, the names are obvious: SBI and Bank of Baroda. In the private sector space, we are recommending IndusInd Bank along with Yes Bank and SDFC Bank.
Okay. Dharmesh, let's talk about some of the themes that are on the move today. We've been looking at some of these names like a Castrol and Gulf Oil, ratings agencies as well, Care, CRISIL, a couple of these are also on the move. Leisure stocks, so PVR, Mahindra Holidays, Delta. So I'm just trying to sort of club them into a few themes, but any of these that you've also been looking at recently?
Yeah, I just spoke about Castrol. That was we recommended yesterday to our clients to buy into, and I think it's a great value buy, and the ROEs are above 100% as far as Castrol is concerned, and the volume uptick was in the lubricant. So that continues to be there. PVR is more to do with GST thing and the festive season setting in. So good movie releases are scheduled, and that's the normal trading traction which you are seeing in PVR. But I think as far as valuation is concerned, now the comfort is not there because the stock has already seen a very good run up, and maybe it can set in for a profit taking activity. So traders with nimble foot can still be there, but as an investment buy for long term perspective, I think it's already seen most of the gains into the play. Apart from them, the names which you took, I think most of them we don't cover in the coverage list. So as for civil lines, I'm sorry I cannot comment on them.
No problem. Mohit, in addition to some of the ones I mentioned, chemicals we've been talking about earlier, and again today a couple of them, so Sharda, Clariant for instance, have been a little active, and even a couple of other names like a KEC, PTC, some of these power names, select ones there have also been moving, and with that we've been seeing sporadic action in a while across some of those power related counters.
Well, to start off with, Gulf Oil is one that you spoke about that's looking good in the charts. Seen a good uptake today. It's nice, forming a nice base around 700. This can perhaps move higher to 750, and if we get past 750, 755 zones, then we can even head to 775. So one can get in here, have a stop loss around 715 zones for targets of 755, and then even higher to 775, maybe even 800, because the trend is really strong out here. A couple other stocks in the chemical space. Chemfab Alkalis is one that's looking good in the charts. It was a buy call a couple of days back. It's continued to move higher today. Yes, it's cooled off from the day's high, but one can use this cool off to get into it. A stop loss of levels of 285, and you could see levels of 310 to 320 in the coming few days. So that also is a buy. As far as Sharda Crop Care goes, that's looking okay on the charts. Has kind of moved higher today in trade, trying to break out. This could perhaps head higher towards levels of 390, 395 in the coming few days. So this is a buy with a stop loss at 372 for targets of 395 to maybe even 400 in the coming few days.
Okay, just want to take a quick look at Eicher Motors as well, Mohit.
Sure. Well, Eicher Motors is continuing to tread higher for the last couple of sessions. It's given a nice breakout towards the end of day today. So this can head higher towards levels of 24,000. Buy this with a stop loss at 23,150 for targets of 24,000.
Okay, let's also get you some commentary from Mark Faber. His views on the market and his always interesting views on central bankers and the kind of implications of any further quantitative easing that we may possibly see going forward from either of those central banks in focus this week. Listen in.
Well, India is like other emerging economies, not a clear-cut case, because in India you have some companies that have actually a very high valuation, maybe between 40 and 50 times earnings. And these stocks, in my view, are probably fully priced. On the other hand, you have companies that are probably more reasonably priced, such as the banks and some cyclical issues. So you have to be very selective, in my view. And I believe that this whole process of indexing has matured a lot, and that the active managers will have a comeback, managers who can select individual sectors. If you look this year, we had a market in the US that hasn't performed well, but if you owned gold mining shares, you've performed superbly. So I think that this active management will come back. Or if you look at, say, I have a global fund, then markets have performed poorly around the world. But you take Brazil, in dollar terms, it's up 66%. Russia is up 25%. Thailand, Vietnam, Indonesia, Philippines, they're all up between 15 and 25%. So you have to be very selective, and then you can make some money. But obviously not everybody will make money, and as I said, you have to be quite nimble.
So, you know, it's a strange scenario at the moment, Mark. It's been so uncertain when it comes to global equities, you know, with no clear idea for investors of where to invest, whether it be equities or other asset classes. I mean, is this something that you have seen before, or is this a completely new dynamic? Because at this point, it's really not making sense, and one's having to look very hard to find ways to make money.
It is a new dynamic in many ways, but I just like to point out concerning the uncertainty. If we look at, say, the last 50 years, we always had uncertainties, but at times investors felt very secure and complacent and optimistic, so they felt that they are certain that markets will go up, and then they collapsed. then the markets went down, say in 2000 and until 2002. Then everybody was bearish, and then the market rebounded. So at the lows, people were certain it would not rebound, and at the highs, they were certain it would not go down. And the same happened in 2007. People were very complacent and optimistic that the market would continue to go up, but then it went down a lot. What is different this time is that you look at the year 2000, we had a Nasdaq stock bubble, high-tech, media, and telecommunication stocks. But all the economy stocks were all depressed. Gold was depressed, all the commodity complex was depressed, oil was around $15 a barrel, and bonds were yielding around 6%, government bonds. Nowadays, you have essentially every asset class that has been inflated. Now, you may come and say, well, Russian stocks are cheap. That is correct. But overall, you look at European bonds, Japanese bonds, US government bonds. They are not going to give you a high return over the next 10 years because some of them have a negative interest rate. And in the US, the 10 years rate is 1.72%. So on the 10 years horizon, you will earn 1.72% per annum. And that's it. Equities are across the board relatively expensive. They're not at bargain levels. So the returns are likely to be also disappointing and will have, of course, a lot of volatility because of all the money printing by central banks. This money is floating around, and one day it will go into real estate, another day it will go into stocks, another day into bonds, and then it will move from one currency to another. Some economists call that a savings glut. That is nonsense. It's excessive money that has been printed by central bankers. It's just slushing around the world.
All right. Well, that slush, never a good thing, according to Mark Farber. But coming back to our index now, we've got Yes Bank up 2.5% today, so a decent move there. Bharti Infratel, Eicher Motors, ONGC, some of the other movers. Hindalco and Tata Steel as well. Some of the metal names are looking good this afternoon. What do you think, Mohit?
Well, Hindalco is trying to hold on to levels of 140, 142 zones, and it's doing all right. If we do get past levels of 147, 148 on the upside, then we can revisit 153. But until 147 is not taken out, 148 is not taken out on the upside, I'd stay away from it. On the other hand, Hindustan Zinc is one that's looking slightly better on the charts than Hindalco, and this can perhaps move higher again towards levels of 225 to 230 in the coming few days. So one can get in here with a stop loss. Tight stop at 219 for 225 to maybe even 230 on the upside.
All right, Dharmesh, let's get a couple of other stock picks from you on the index. Where you feel the strength is going to come from? Should we move higher from these levels?
Yeah, definitely we should move higher from the current levels, and I think a new high before Diwali should be the likely scenario on the Nifty index fund, and the pockets which will show strength will be banking and financials, automobiles, and materials like cement and metals. These are the sectors which is going to pull index higher, and IT and pharma will support the index in a submissive way rather than being our front leaders. Oil and gas is the only sector which I feel can be a dragger going down. So if you look at the index composition and the weightage in place, I think it's fairly skewed in favor of index getting higher, because banking and financials are finding still very good buying traction if macro stability is there on the global front. So post this event, that FOMC meet and the Bank of Japan meet is over by tomorrow. So from Thursday we can see this up move beginning. And I again reiterate, even if there is a correction in the market, we would be recommending buy on the market, and I think the correction will be soon bought into.
With financials, NBFCs, I think you spoke about Yes Bank earlier. What about some of the mid caps as well? Magma, FinCorp, Edelweiss, some of the names there?
Well, Magma FinCorp is coming back in trade, but I'd wanted to get past levels of 102 before we do initiate any longs on that. So let's wait for that. As far as Edelweiss goes, it did see a good up move in trade in the beginning, but it's cooled off from the day's high. Again, it's trading in a range-bound kind of movement between a broad range of 100 to 115, 120 on the upside. So let's just wait for things to settle down. Perhaps when we get a break on the index in a couple of days, after maybe the big news flow on Thursday, we'll get a break on Edelweiss also on the upside.
Okay, just to go into a bit more detail when it comes to sort of tech and telecom at the moment, Dharmesh, and your view there, because both those sectors, lots of action that has been unfolding, not all positive, but definitely lots changing and unfolding.
Yeah, but I think both the sectors are facing severe headwinds, and as far as technology sector is concerned, one has to wait for Q2 FY17 numbers, and as has been guided by Mr. Vishal Sikka of Infosys, that he would be updating on the likely impact of Brexit and how the further their guidance will shape out after the numbers are announced for Q2 FY17. So one has to wait till that thing, because I think they have been the flag bearers of the IT sector, and once the guidance is there, one can again, it will be again subject to revision going forward. But yes, the scenario looks difficult, and more of a trading kind of a scenario emerges there, rather than for a multi-bagger kind of perspective in the technology sector, where you can buy a stock and hold on for 3 years, compounding at 15-16% rate looks unlikely as of now. Coming back to telecom sector, it's very wide open as of now. But one thing is for sure, going forward, the margins are going to fall, operating as well as the PAT margins, and there would be severe competition between all the three players post December, that is January CY17 onwards. So because one more very big player would be entering, and they will definitely try to eat into the market share. So tariff is the only way where you can survive in this competition which would be emerging out. So as of now, it's a complete avoid. One should be getting out of all the telecom stocks.
Any more strategies this afternoon, Mohit?
Well, a bunch of small caps are popping up in trade today. They are trading, looking really good in the charts and trading at nice highs. So one is Josel. It's moved up pretty smartly in trade today, trading at all-time highs. This can head higher towards levels of 245, 250. It's a buy with a stop loss at levels of 227. Also, Care Ratings is one that's looking really good in the charts. Seen a good uptake in trade today. This could head higher towards levels of 1300. It's a buy with a stop loss at levels of 1220. Also, Sri Real Seema Hypo, which is one that's a very small cap stock, is locked up on upper circuit and trading at all-time highs. This is a very bullish sign on good volumes. So this could head higher towards levels of 130, 135 pretty easily. And lastly, Sri Pipes is one that's also looking good in the charts. Seen a 5% up move today in trade after a nice base formation. This could head higher towards levels of 315 to 320. It's a buy with a stop loss at levels of 298.
Dharmesh, do you want to run us through any more of your topics, and also within the market right now, would you prefer to stay focused on the index or also look at broader markets?
No, we would definitely look at the broader market, and bottoms up approach is what we would like to play out for in this market. Index is subject to muted returns, but stocks you get plenty of good returns. So apart from the stocks which I spoke about, or maybe from the pharma space, Aurobindo Pharma looks pretty attractive valuation wise as well. It's still trading at around 30% discount to SPL like Sun Pharma or Lupin. So value buy at current price levels, and we have our target of 1050 based on FY18 EPS estimate for Aurobindo Pharma. The macros, I mean all the fundamentals are panning out very well for Aurobindo Pharma, so one can look at buying that stock. Apart from that, automobile stocks like Hero MotoCorp and Maruti are the two stocks which should be bought on corrections. Stock price should not be chased as of now. But if there is a correction happening of 3 to 5%, one should be buying onto those stocks with for longer perspective, maybe a year's time horizon. And cement, I already spoke about. JK Cement and Ramco is from the mid cap space. From the large cap space, Ultratech Cement remains a value buy.
All right, so cement's definitely a space that Dharmesh is fairly bullish on there. Gentlemen, we'll just count down to close now. We've just got just about a minute and a half to go, and the index today down about 0.4%, so just again below 8,800 this time. But on top of the charts, we had Yes Bank, Bharti Infratel, Eicher Motors had a good day as well. ONGC is up about 1.5%. Hindalco, Tata Steel, some of the other movers there. And in fact, we also had Cipla from the Pharma Pack up about 1%. HCL Tech, Grasim, Maruti, some of the other names there that were also moving. But on the downside, if we just take a look at that, we had stocks such as Hero Motors was down 2.5%, Adani, Bajaj Auto, IndusInd Bank, ACC, Tata Motors, a couple of those auto names for sure. Bharti was down just over 1%, HUL, Infi, further trouble with top level management there, NTPC, BHEL, a couple of the other names. ITC has also been quiet, and Reliance was also down today about 0.5% or so, so no contribution or strength there. TCS was just about flat, but the market was definitely skewed a little bit more towards the losers in today's session. The mid-cap indices also a little quiet, but we had specific movers, the Castrol, Care and Crystal, for instance, Delta Corp, a whole host of pharma names as well that were moving up today, and we'll run you through some of them as they come up on your list, on your screen as well. Marksons, Dishman, Wockhardt, for instance. Escorts was looking good. Bajaj Finserv was back in action. PVR as well, for example. Jubilant, of course, on the downside, given the news around its CEO resigning and other restructuring at the counter, so that continued to look a little weak in trade, as did a couple of other names like Indiabulls Real Estate and Dish TV, for example. So a couple of names there on the downside as well in the broader markets, but otherwise there were plenty of other stock-specific movers. So for instance, the JK Infra, IFCI, Jyoti Labs, Aarti Drugs, for example, a couple of the other names there on our list today. So definitely enough in the mid caps there to sort of take home. Relaxo Footwear is up 3%, Edelweiss, another one there on the move today, and a couple of the chemical counters as well that were also seeing a little bit of traction coming in. So a fair amount of action there when it came to the mid caps. All right, gentlemen, thanks so much. We're going to leave it there this afternoon. Thanks for sharing some of your strategies with us. We've had a pretty quiet session, and remember, we've had the 3-day FOMC start. We've also got the BOJ's commentary that we're watching out for. We had a little bit of action in mid-cap real estate as well today. That's been cropping up here and there. It's another pocket of the market as well, and select names related to power. But that movement has also been fairly sporadic. But markets clear.